eToro, why do 77% of traders lose money? Now, this is a massive question, and you can see it under warning up here at the top. 77% of retail investors lose money while trading CFDs with this provider. But really, it's not eToro's fault. It is on every broker you will look at. You see here, XTB, it says 81% of retail investors lose money while trading CFDs with this provider. Now, I'm going to be going through the reasons for this. I'm going to be showing you examples of it, a real life example too, and I'll be going through some of the ways you can avoid these mistakes, etc. But looking at this here, if you look around the internet, you're going to see all of the same information: lack of patience, poor risk management, trading without analysis. So without experience, time in the market, over trading, this is a big one here. But really, there's a big reason here between this, because when you trade CFDs, you're going to be using leverage. So the reason for this is that trading is inherently risky, especially with leverage. You can see here on eToro, you can get up to 400 leverage, which is massive. But what that means is, see, trading is for the short term, especially day trading, is more riskier. It's like the hare and the turtle. The turtle will win the race, because if you're a trader or investor, investors are usually got a better percentage and less risk. And usually this, for long-term investing, you should only buy the underlying asset and not CFD trading. So investing is for the long term, trading is shorter term, and it's going to be higher risk if you're using leverage. So leverage allows traders to potentially make more money, but also increases the risk of losing money. And I'll just show you here, if I go on to eToro here. So I'm on my practice account here, where you can practice this out yourself. And if you want a practice account, you can get a free 100,000 practice account with my link in the description. So let's do an experiment here, and this will make sense at the end of the video when I go through the real life example. So before I put on that trade, I'm going to show you how you find out what is a CFD and what isn't a CFD. So here, if you buy Apple and you invest with 4,830, you can see here with one leverage means no leverage. You are buying the underlying assets, so you own the stock. So you own this stock. So, but if you anytime you use leverage, you're going to be moving into a CFD trade. And let's quickly go through that, and we'll go back to this slide here. So what is CFD trading? CFD trading stands for contract of difference. So really what you're doing, you're not buying the underlying asset, you're just making a contract with eToro to buy at this price. And if the price rises, you make profit. And if the price drops, you lose money, okay? And that's basically what a CFD is. And quickly, what leverage is meaning traders have to deposit a small percentage of the overall exposure to the market. So basically what leverage is here, you can think of it as a loan for a house. So let's say you're getting a loan for a house, but you don't make enough money and the bank wants collateral. So they want collateral maybe of land you own. So this is really only collateral. So 1,000 collateral, and you're borrowing 9,000 of eToro to get 10-to-1 leverage. So you invest 1,000, but you're really investing 10,000, but borrowing 9,000 of eToro. But so you need to look at leverage as a loan. You're lending money off the broker to trade, okay? On indices and EFTs and any sell position on eToro is a CFD trade. But if you buy with no leverage, you're buying the underlying asset. And that's what you should do for investing, okay? But trading is more riskier, especially day trading, but swing trading is less riskier. Swing trading is for like a month or a few weeks, but just remember that. Okay, so for this experiment, let's invest with 45,000, okay? And I'm gonna go 20 leverage. So I'm putting down the collateral of 45,000. I'm gonna put in a buy position. That gives me exposure of 900,000. So I invest 900,000 into NASDAQ 100. And I take my profit at 22,000, okay, and the stop loss is at 12,608, and the current price is 12,933. Might seem a lot, but it's nothing. That's really only 2.5% away from this price. And if you look at the NASDAQ for over the past year, for the start of the year till now, it has changed in price by 20%, okay? So that can change a lot. Even in 1 month there, you can see, let's see, 1 month, it changed by 4.1%. So you can easily lose that trade. Okay, so let's put on this investment. We're going to put 20, okay, 20 leverage, and we'll open that trade. It's a CFD trade. And for this experiment, I'm also going to open another trade, 45,000 in a short position. And a short position is always a CFD with 20 leverage, and open the trade. And then both trades now are opens. So if you come to your portfolio, I can come in here and you have them both trades. Look at this already. Only opened it. And you see how it's flipping. Oh my God. The both of them are buy and sell. Both of them. See, this one's 41.55 in profit. Now this one's minus 222 already, guys. That is the risk. But the gains are massive in leverage too. I have used leverage in the past, but I've got a lot more experience, but I'll only do it if I'm really sure on a trade. For example, let's say over the NASDAQ. Okay, so down here, when NASDAQ over 1 year, it went down to 600. It went down to 10, 9, 10, 800. So if I'd be happy with buying the NASDAQ down here at a high leverage, but up here it can go up or down. So that's only if we're really sure about a support line here, really good support line. So if it goes back down there, it's a good time to buy and use leverage. But otherwise, if you're just beginning, don't use leverage, or actually don't use leverage at all. You're better off without leverage. Okay, so let's just let that simmer there, and we'll go back through our notes here. What else can we say about people losing money at CFD? So the big problem is desire to get rich quickly. Okay, so as you can see with that trade already, you can see you can get rich, $180, $220 in a few seconds, which is it's good money. Okay, so that's what you get addicted to. And then, but you're better off making 20% in a year investing, and it should be your goal, rather than getting rich quickly. So the problem is people want to get rich quickly. Okay, so if you look all over the internet, these are the reasons. Okay, so one of the primary reasons for losses is over leveraging. Well, traders take excessive risks in the hope of generating larger profits. Another common mistake is supporting losing positions, which can result in significant losses over time. So this is the problem, guys. People will take this money quickly, but then if they're in a losing position with leverage, they're going to think it's going to go back up. They don't want to lose that money, so they keep it in and keep it in. And you need to set your stop loss, okay? You need to set your stop loss, a strict stop loss when you're using leverage, okay? And also, let's go back here. Traders, also must pay attention to stops at sensible levels to contain liability. Avoid gambling. So gambling, a lot of people say when you use leverage, it's gambling. That's up to you. And misreading the market, not understanding the market. Finally, bad luck can happen even to the most experienced traders due to the unpredictable nature of the market. But that's why you need to have the stop losses in place. So to get really what happens, and I'm going to show you a few tips and tricks on how to avoid losing that money too after this. Remember, if you want to try out this trick for yourself with leverage, I'll leave a link in the description where you get a free demo account. You can play around with it yourself, because you're not using real money, and then you see exactly what you're doing. Okay, so a man called, this is a real life example. This guy made a video. He's called Mott Copy Trading on YouTube, and he said he lost 13,000 trading and what not to do. Okay, and what overview of this video was, so he lost £10,000 trading over 8 months using credit cards he didn't have fund to pay back. But he used platform, but he's used eToro, but he's nothing against it. But he made the mistakes. He also opened buy and sell positions at the same time, which worked 50% of the time, but it was hard to keep track of. So this was how he was trading. So I watched the video. It's a very sad story, but hopefully he's doing well now and he got all that debt paid off. But we'll play a bit of his video now. So there you can see that's what he was doing. He was doing this, but he was doing other things which were nonsensical. So this was maybe some of the reasons why you can understand why people lose money with CFDs. He did 919 trades over 18 months, averaged 28.5 trades per week, addicted to trading or gambling, leading him to deposit more money and try to make more money back. So he lost money and he was his emotions got to him, and he was revenge trading, which is called in the market. Okay, so let's just look at some of his videos here. High frequency trading. Let's see what he says here. Okay, I'll just turn up the volume a little bit.
Yeah, usually making a loss. And as soon as it does go green, even if it's like $5, I'd take it because it's green. That's just.
So he said there he'd take $5 profit, but if he's in a losing trade, he would leave it in, which is a mistake.
The weird psychology that I had. Yeah, even if it was $1,000 on the red, I'd just leave it there, hoping that it would go back to break even or green.
So he was in the red, and that's why you need the stop losses. Okay.
Averaging 28.5 trades per week. At one point, that was a lot higher. I think it was like 40. That's just not good. Way too many trades. Just trying to make a quick buck, but just losing the money instead. So that's another thing which had my downfall. Just way too many trades, getting too greedy, too excited about potentially gaining some money, which did not pay off. Here's a quick look at my stats for.
Okay, guys, look at his stats here, all in the red. Oh my God.
2019, started in April, minus 25%. May, minus 30, minus 55, minus 43, minus 58. At this point, I kind of gave up a bit. I think I drew some money out, just did a little tiny bit here and there. And then I put a huge amount on, and then I finally quit solo trading between November and December, mid-November, I think it was. So yeah, very, very, very bad experience. No.
Yeah, so he explains in the video it was a very bad experience, especially like you're already using leverage, you're lending money off the broker, but he also uses credit cards that he had to pay back afterwards, which is madness. Let's see what else he said.
I use the candles a lot. I didn't really use the graphs a lot. I just look at the numbers.
So he didn't use the candles or didn't use the graphs at all. He didn't have any technical experience at all, and he just looked at the numbers
on the portfolio, which shows you what you're trading, what number it's currently on. So to be honest, for the first few months, I didn't even use the graphs. So that's one of the first things where I went wrong. I didn't do any analysis. I didn't look at any of the patterns on the graphs or anything like that. And if I did, obviously I would have seen this and not sort of betted it to go up, which is what I did. So I put, I think it was about $2.5 grand for it to go up. And that was on this day here. And obviously instead of going up, I just saw my money start to go in the red drastically. And then I think it cut out.
So he had no strategy at all. He was just putting on trades and not looking at the graph or nothing. What else?
This thing that was detrimental to my experiences. I used the highest leverage that I had available.
So he's using the highest leverage available. So he's probably using 20 leverage.
To me on every single trade. So that was my problem, is trying to get the money fast, overnight, really quick, highest leverage, highest risk.
Getting rich quick. This is the problem. People want to get rich quick.
And it didn't pay off at all, really. I mean, I made some money along the way, but mostly I just lost it all. So it's too much of a risky procedure, too much of a risky strategy. I didn't really know what I was doing, as I said.
So he has admitted he didn't know what he was doing. So you need to educate yourself and get a practice account and do a course or watch some YouTube videos and learn about trading first and research the companies. Okay, so let's come back to our experiment here. So you can see here already, and the market is slow at the moment because it's not open. The main market's not open in New York. It's only like 5 a.m. over there. So so you can see here how to trade. You can really lose the money. So already I'm losing 500 on that sell position, but I'm up that much, 333. So that's what he was doing. But here are some tricks. Okay, let's use this example here. So once you're in the green with a leverage trade, what you can go in and do is set your stop loss at 0 so you don't lose any money. So it takes a lot more trading because it'll hit your stop loss, hit your stop loss, hit your stop loss. But that is one way you can stop to losing money. And also, you need to be wary of your margin. Okay, so the problem is people hit this margin. Okay, they hit this stop loss amount. Okay, so let's see, it hits that stop loss amount of 13,258. Okay, so on the sell position. But what happens is that's 50%. So what you can do is, if it's coming near your stop loss, you can actually add in money. So let's say you can add in minus 23. And see here, note additional 923.25 $27 will be deducted from your available funds. So if it's getting near your stop loss and you really think that it's going to go back up in the market, you can invest more money to increase your stop loss so you don't get stop lossed out. And that's what happens to a lot of people. But really, guys, that is really risky. You want to be putting a small stop loss in the red, or either once it goes into the green, putting a stop loss of 0. But really, I don't recommend trading with leverage. I'd rather not use leverage as a beginner. So just be careful of that. So you can see here, these trades here, it's going to be either big money or a loss. So I'll just close these off here. So you can see there, I made a loss there. Okay, so I hope you enjoyed this video. And if you want an eToro practice account to try this out for yourself, just use my link in the description to support my work for free. Please like and subscribe, and I'll see you soon on the next video. Bye-bye.